This one stock can change early buyers' lives. I'm not a financial advisor, but some financial advisors might say to buy as much as possible before December 13th. The company is Lemonade Insurance, ticker symbol LMND. It had $190 million of revenue in quarter three, up 40% year over year. It is an insurtech marketing automation company. So they put up ads, consumers go for a quote, and they get a cut of that. So they are unprofitable right now. But the company itself, the stock price looks like it's shaping up very well. So this is sort of a momentum play rather than a long-term bet. You know, it's in the same category of like buying Open Door stock, which is, whatever, $15 right now, and very unprofitable. So that's the first company. There is another company as well, Figma, which is a recent IPO. They do design software, kind of like Canva or like a new version of Photoshop. I think Photoshop or Adobe meets Google Docs, where you can collaborate and you see everyone's real-time changes on there. So they actually were going to be acquired by Adobe. There's a little bit of a trust issue there, and they have been IPOing and going down. So it looks like there could be some turning up recently. They recently had revenues up 40% year over year. I'm not even sure if they've been public for a year. We'll have to look at that, but I guess they just use their private numbers for that comparison. And they have a lot of revenue, 300 million. So this is, no Microsoft Paint or anything. This is a big deal design tool. And these two companies are both software names, but under the guise of insurance and I guess AI. Figma has, AI as their, all these software names are AI names right now. So let's jump into these. The market is holding up into the Fed likely cut tomorrow. As of the time of recording this video. Let's jump into these two.
This is Sam Putnam.
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 It's burped. So the first company, Lemonade, revenue of 190 million, up 40% year over year. This is what we're seeing on the Lemonade chart. Sort of a picture perfect flag, which, not to say the same thing every time, but what's happening is, to say it in a dumb way, people wanted to buy it after earnings. They didn't want it that much, so they sold it. They definitely wanted it more than that. They didn't want it that much. They wanted it more than previously, and then they didn't want it again. So there's definitely a spot where there's uncertainty about it being worth more than that, but every time it comes down, it gets bought back up almost immediately. So think like quicker and quicker buyings of the dip. So the reason I say that in sort of like fifth grade way is that this is not astrology, right? I mean, it is if you're looking at a tiny name, but this company has millions, hundreds of millions in revenue. Recent earnings is a loss, but it beat expectation, and it's setting up well. And if you look at Figma, it's a little different, but same sort of idea where you can risk, yesterday's open, 38, depending on where if it doesn't gap up. Ideally, it goes sideways, comes up, another green day, and then goes sideways again, and you can buy it right over 39. You can risk this high of 39.4 and risk 20 cents to make $2 at least, but more like $5. So that's kind of ideal. And just to make a picture of what I'm talking about here, basically, we would hope this would go sideways overnight. Maybe have one more up day, or you'd even have a down day and then an up day. But what you really want is not to have a gap up in the morning, because then you're buying it up here, already risking 1% or more, when you want to buy it as close as possible to your stop. So you can risk 0.25% to make, 2.5, 0.25% to make 2.5%, or, at worst 1% to make 10%. So it's not to make this totally mathy, but I'm just being real with you. That's pretty much how people who do really well with it. It's not like they necessarily know that these two companies are going to be the next, Cursor, the next Kalshi, the next OpenAI. I mean, I'm naming private companies, so that's really bad examples, but the next NVIDIA, the next Taiwan Semi, the next AMD, the next Robinhood, those are all public companies. So what happens is maybe you buy it here, you get chopped out, but your loss is very tight. So someone who's extremely good might actually lose here, here, have 3 losses, and then the 4th time they buy it, even when it just goes up 5%, they've already paid off those 3 losses, and then they're holding it and they make, 30%, and now they paid for a bunch of other losses as well. So it's not really like, the best investors, I guess you really ought to be calling this trading, are seers or, future seekers or anything like that, fortune tellers. It's more like they're extremely risk averse, and they try a lot of different entries until they find one where they can just sit in it, stay positioned, and then just get paid as well as the company does the work, or the more demand comes into the stock. So could happen with Figma as well. Maybe it was interesting here as a little bounce play, got chopped out, you lose 1%. Maybe I don't know, maybe here, although it had already gone up 3 days, and then you lose 1%. You've already lost 2%, and then here you make 10%, and you've made 8% in aggregate. So there are commission fees, but they're pretty minor with almost all brokers. Of course, Robinhood doesn't have any commission fees at all. So I can look at what these companies are doing. I've talked about Lemonade in detail in the past, so not really enthused to do that. But this is what they do. If you're just learning about this company, they do AI for insurance. So, the voice of this company is basically being the middleman between insurance companies and social media companies, aka companies that sell ads or ad space. And then Figma, if you're not familiar with this company, they do user interfaces. It's a super cool tool, product development. They're in the same category of Notion. If you've come across that one, it's basically like a project management tool, like Asana, that will probably go public at some point as well. Figma is like the new Adobe. So I don't know why I'm navigating this website for you. It really doesn't do anything for you investing wise, but that's the actual company, and they are, branding themselves as an AI company as well. So Figma Make is the AI tool. So those are the 2 ideas that I think are super interesting, and can come up with idea. I sort of gave price levels already for both of them. And then as far as context of just the broader market, probably the smoothest way to look at this is if you just look at, you can have a watch list, that's great and all, but if you look at the companies that have moved the most recently, and NBIS is in that category, it's a company NVIDIA invested hundreds of millions in. How you measure these is you look at how much they've moved over the past week or 2 weeks, and then you look at how much they're moving over the past year on average. So this NBIS has moved 7% over the last 10 days. SanDisk has moved a lot too. Neither of those are particularly interesting. T10 is just up too much. I think it's also super illiquid and choppy. So these are how you find these stocks. We do talk about this in detail in the Discord, as well as how past ideas went. QXO, another example of a stock that, if you see on that screen, 33% is the average daily range over the past year. And how could that possibly be the case? Well, I mean, look at this move. It went from 13 to 24. So actually, no, this is why it had that move. So you can just completely ignore the stock entirely, actually. But soon, some of these AI stocks moving more than 5% a day are all in the ballpark of interesting. But in general, I mean, you don't really want to buy crypto stocks when Bitcoin is still struggling. So a lot of these companies are sort of out. Maybe you can risk something here and jump in. I know MicroStrategy, or Strategy as it's now called, is finally leveling out. So there's some buying interest there. But if you're just banking all on crypto right now, I don't really know that now is the time. Galaxy is turning up a little bit. Circle is turning up a little bit. But I certainly don't want to buy too much of these. I mean, BMNR, another one, the Ethereum Treasury, they're having moves. But as always, like, you kind of want to look for opportunities where flags have formed, and not at the bottom of bases, but somewhere where there's significant volatility contraction. So the flag gets tighter and tighter and tighter and then explodes up. And this is just beautiful. We've talked about this Bitcoin breakout multiple times. Tesla breakout, very similar. I mean, this is as beautiful as it gets. And these are the most liquid assets in the world. So until that happens, this is the Bitcoin ETF. IBIT is the way to play that in a similar way to Tesla. It's just not that interesting here. I mean, I get that it's a higher low, but we were just looking at a lot of companies that had higher lows and then, selling off. Navitas, everyone's excited about this company because it had a 100% move, but unless there's some type of reason to buy it, which I don't see it really right now. I mean, sure, you can buy off of this level, but it's just there's better opportunities here. So it's good to sort of stay away from some of these story stocks. And if you look at these stocks the way I think makes the most sense of them, to look at them, it's smart, I think, to look at sectors. So a firm would go together with Upstart, right? They both do lending, buy now, pay later. Neither of them are particularly interesting, but banks as a whole are not super interesting. They've already gone up. Goldman Sachs has gone up. Interactive Brokers is always kind of difficult to play. It's choppy. And in Morgan Stanley, these stocks are fine. They just move very slowly. So this is hard. This is all messed up on this chart. So if we look at Wells Fargo, also a little bit messed up. Well, regional banks, KRE, and that one is easier to look at. But in general, these banks, we looked at Goldman Sachs, that pretty much tells the story. Citi is another one that tells the story. They've already gone up, and they move really slowly, 2% a day. So there are some stocks that have done well, that move slowly, 3% a day. EQT could get interesting there. The most recent one, GEV, that had a big sort of move in one day. 5% in a day is huge when you're a company. It's whatever it is, $600 times 2 million. It trades over $1 billion a day. So there are definitely opportunities out there, but for 99% of people, they don't need that much liquidity in a day. So I don't even bother talking about it. Plus, you have to be aware that just because GEV went, that wasn't totally predictable given VST and some of these other power stocks, are setting up, but PWR, Quantum, may or may not go. This company is a sort of a GPU services company as well. It's actually not a power stock. That was a terrible example. But GEV and other power generation stocks, definitely worth keeping on watch. This company previously, I've mentioned it multiple times on the channel. They are basically similar in the category of Bloom Energy, which is remote mobile energy services for data centers. So you can set that up really quickly. So long-term, interesting, but short-term, I don't know, just kind of choppy and not particularly buyable, kind of like A-Lab. You know, interesting, but then you have big candles down like this. Marvel had a big sell-off as well. So the semi-play that's in the same category as A-Lab. So there's a lot of names, sectors that have been talked about by me, by others. Quantum is not interesting. Batteries are a little bit more. QuantumScape and AMPX almost as good, but EOS probably the best in terms of high or low and, you know, price holding up there. As far as these two ideas, though, looked through a lot of stocks here, and Lemonade is definitely the cleanest flag, and TSM probably the easiest risk reward setups right now. So if you like these ideas, hit that like button. I know this is a lot, but every once in a while you got to just plow through the charts just like you actually do in reality instead of talking about the stories. And if you want a free course on how to find the next NVIDIA without gambling on startups, hit that subscribe. If you want to hang out in the Discord and see the best idea of the day, head over to stockscommunity.com.
Sam Putnam.
This is Sam Putnam. This is Sam Putnam.